What's up, family? It is Caden with Urban Finance. Today we're going to be talking about one of our home run stocks that have doubled and that will double again. I will also let you know what the next home run stock is for this channel. If you're new to this channel, I talk about everything related to financial literacy, investing, and building generational wealth. So if you haven't already, go ahead and smash that like button. It really helps out the channel. Subscribe to the page and hit the bell to be notified of when I post something new. And if you haven't already and would like to get a free stock, feel free to do so by signing up with Robinhood with the link in the description. Let's jump in. Let's take a look at my Robinhood portfolio real quick. For the week, I'm up about 5%. For the month, I'm up about 18%. Looking 3 months out, I am up about 39%. And for the 1 year, even though I haven't had this account for a year yet, I'm up about 40%. So right here, we're looking at one of our home run stocks that has already doubled and will potentially double again. Aphria has been up as much as 150% since we first recommended it on this channel back in October, and it's currently up about 137%. And I do think this is one company that will double again. Along with Aphria, we recommended a ton of other companies back then that has also doubled, like Tilray and Aurora Cannabis. The next home run stock for this channel that I'm going to recommend is not in the medical plant industry, but I did see a great buying opportunity for those before the elections. And I know some people bought as much as 1,000 shares because you told me in the comment section below on that video, and so I know you're sitting lovely right now. Here's how I'm going to play Aphria, similar to how I played Aurora Cannabis. When Aphria gets to $20 a share, I'm going to set a trailing stop loss on it that will sell out 25 shares. This would allow me to recoup my initial investment in Aphria. Then the remaining 75 shares, I'm just going to let that sit. Because I do think out of all the companies that are in the medical plant industry, along with CGC, Aphria is one of the strongest companies and will probably outlast the competition. And so I can see this stock going all the way up to $100. But because I know the stock market in the short term can go up and down very quickly, I'm gonna recoup my initial investment and put that into another company to diversify my assets. So that's how I'm playing Aphria. The second company that I want to mention that we're doing really well on this channel with, we picked it up about around $6, is Nano. Now, Nano is around $14, so we're up about 140% there. And I do think that Nano still has a lot of room to grow. Similar to Aphria, I will be setting a trailing stop loss on Nano around the $20 mark. I will only be selling out about 10 shares for Nano. That again would allow me to recoup almost close to my original investment in that company. And so this is how I'm playing these companies. And I know a lot of people are up significantly from 2020, but that doesn't mean 2021 is going to be as fruitful. So you do want to take some profits. And so here is our next home run stock for this channel. So I currently have 50 shares of Apex Technology, which is a blank check company that is going to be merging with a company called AvePoint. And so I've done several videos about AvePoint on this channel, I believe as early as December, before I even picked it up. And in January, when I actually in early January, at the start of the year, when I actually decided to pick up the shares. Now, the reason why I'm bringing AvePoint up again, or Apex Technology, is because it is still within our buy zone. As long as this company is under $16, I will be adding to it. As you know, based on the amount of money I add to my Robinhood portfolio every month, I usually only try to pick up about 50 shares of a company that is above $10 a share. But I do think Apex Technology is going to be a huge company, so I will continue to add to this company every month until it crosses that $16 mark. That means that in a month from now, I may add additional 10, 20 shares, depending on how much money I would like to allocate to it. But every month I'll be adding to Apex Technology as long as it's under that $16 mark. I'm telling you right now, this company is going to be big. The second company that I recommended as another home run stock this year is ticker symbol BFT, that it will be merging with PaySafe. Now, this company has already crossed my buy zone, which is $16. I believe the company is currently sitting at $18.50. Like I said, I'll put it on the screen so you can see it, but this company crossed my buy zone before I even got to that 50 share mark, and I am not chasing it up. If it comes back below the $16 mark, which I don't think it may necessarily do, then I'll pick up more shares. But I'm not chasing it up to $17, $18, $19. No, I'm leaving it where it's at, and maybe after it crosses, let's say, the $30 mark, I may or may not sell out of the position, because I haven't been able to accumulate my 50 shares. But that's how I'm going to play that. I'm going to hold this company. I'm going to hold PaySafe as well, potentially for at least 100% gain, and then I may take out my entire original investments there. Now, we've had home runs with more than just those two stocks, but I just wanted to highlight two stocks we've had a home run with that we're still currently holding, and two more stocks that I'm pretty sure that we'll have a home run with again. Now, the market in 2020 was great to a lot of investors. As you can see here, there are other accounts that I have that had the same 40% return that were just in ETFs. These are uncommon times, I'll let you know that now. And so if you notice that companies aren't shooting up 100, 200, 300% like they were in 2020, that's just because the market is going back to normal. Now, for me personally, I do not necessarily chase penny stocks unless I think there are solid companies or a company that I want to hold long term for one reason or the other. And so I wouldn't be promoting a lot of penny stocks on the channel. Nothing's wrong with that, not judging, but that's just how I play the market. Most of my money, like I always say, are in ETFs and index funds. That's how I like to play. Even in this account, most of my money is and will be in ETFs and index fund. As you know, if you've been following the channel, I'm heavily invested in ARK and will consistently every month dollar cost average into ARK. This is a disclaimer. This is not financial advice, remember that. But the second thing you need to remember is that these are uncommon times for the market. And every time the market has given these 100, 200, 300% return, there have been huge corrections and huge losses for some people. And so make sure you're taking profit, make sure you're protecting your gains. One way to do that is taking the gains from some risky investments and putting them in some more stable companies that we know that will be here for a long time. The way that I personally play it, I take it from the single stocks and put it into ETFs. So don't leave all of your hard-earned money on companies that have been doing really good now, but may not have a future in the next 5 years. That's just my disclaimer. You do with that as you see fit. Now, if you got anything from this video at all, go ahead and smash the like button for me, subscribe to the page, and hit the bell to be notified of when I post something new. And like I always say, even in the midst of these crazy times, God bless you, and remember to live your best life.